In this episode, we speak with Larry Contrella, General Partner at JMI Equity, a growth equity firm focused on investing in leading software companies. Today, the firm's portfolio represents $9 billion in combined revenue, $75 billion in aggregate enterprise value, and over 37,000 jobs. Larry joined the firm in 2010 and focuses on investments in B2B software businesses. For the sixth consecutive year, Larry has been recognized by GrowthCap as a top 40 under 40 growth investor, in addition to being recognized as a top software investor for the past 2 years. I'm your host, RJ Lumba. We hope you enjoy the show. If you like the episode, click to follow.
RJ Lumba is the managing partner of GrowthCap and the executive chairman of Market Insight Media. He is the host of Growth Investor, a podcast featuring today's best investors, executives, and founders. In the minutes ahead, we'll uncover insights and strategies for accelerating growth and succeeding in business.
Larry, thanks so much for taking the time to chat with us today. It's a delight to be with you.
Yeah, no, thanks for having me, RJ. I'm excited to be here.
It's been several years, I think, since we really had a long conversation. For the audience, there was a time where I was doing more private equity transaction work, and we had the benefit of working with each other on something. I got to know a couple of your other team members, one of your portfolio companies, and I really had a great experience working with you guys. You know, I work with a lot of different private equity firms, but I noticed that the three of you that were on this team all had a similar approach in that you were very collegial, very collaborative. Let's start off with the culture of JMI and the types of folks that maybe gravitate towards your firm.
Yeah, culture has been a huge part of the firm. And look, we've been doing this for a long time. And, you know, in order to keep everybody around and together, I think everybody needs to really enjoy working together. And so we've built a really good group of people. You know, we all work hard, but everybody also really enjoys spending time and working with each other. And the other thing, I think, because we've had just a consistent strategy from the start, you know, we're all on the same page, you know, as it relates to the types of companies we get excited about, you know, what we're trying to get done at our companies and the like. So I think that's a good observation.
And is there something when you're interviewing folks to join the firm, I presume it's multiple people, you know, interviewing an individual, and then you get a consensus opinion on how they would fit in the culture?
Yeah, that's it. You know, if we're interviewing somebody for any position at JMI, we have the whole team spend time with that person over the course of that day. And sometimes it's multiple days. And so that everybody doesn't have the same interaction, you know, the same interview each time, we try to divide and conquer and each spend time on different topics to get a good feel for that person, that individual. And then at the end of the day, we all come together for a debrief. And it needs to be unanimous, right? I mean, it's a really important decision. It's a very high bar, you know, for the folks we're bringing onto the team. And so everybody needs to be excited about it. And so that, yeah, that's sort of the bar.
It's been some time since I interviewed one of your colleagues. And so maybe for the benefit of our audience, if you could give us a refresh on how JMI, the history of JMI, why is it named JMI, and kind of the early days, and then we'll lead into modern day.
Yeah, definitely. So JMI, we're a growth equity firm focused on investing in leading software companies. We've been doing the same thing for over 30 years. So the guys who started it in 1992. And the original genesis of the firm, there was a company called BMC Software. The founder of BMC Software was a guy named John Moores. And John really saw that software was going to be a huge industry and end market with really good tailwinds behind it. And so he convinced two of the bankers that took BMC public to leave their jobs at Alex Brown, which is why we're based in Baltimore, and invest, you know, their money and John's money into what was at the time a pretty nascent industry, into these growing software companies. And so that was Fund One. It was JMI, John Moore's Investments, and it was partnering with, you know, founders, entrepreneurs, management teams to help them scale their businesses. And it's been a consistent strategy from the start. So 32 years later, we're doing the exact same thing, and you know, we're now 11 funds in.
Mm-hmm. And when you think about the software industry and evolution it's gone through and it continues to go through, is particularly with AI being layered in. Is this an industry that has a runway for many more decades? How do you think about the future of the software industry?
I think we're in early innings. I mean, it continues to evolve. There's software that's used in every end market you can think of, right? Everywhere. And so it's amazing. We still come across companies that are automating things that are under automated. So processes that are being done manually or really inefficiently. And an entrepreneur, a founder sees that, sees the way it's done, and builds software to automate it. And it's amazing. We still see examples of things getting automated 32 years later. We think we're in early innings. I don't know if we're in the third, fourth, fifth inning, but I think we all believe software is going to continue to be a bigger and bigger part of the overall economy. And, there's plenty more to automate and streamline. AI has been interesting. We get involved and we can spend some time on it as growth stage software companies. So we're not venture investors. We're not taking big bets on products or new markets that don't yet exist. So for us, when we think about AI, it's really pushing our companies to utilize AI to enhance their offerings and do more for their customers. But we're not investing in underlying AI technology or infrastructure. There's plenty of, big guys that are investing tens of billions of dollars in that. But it will change, the market and the software ecosystem, probably in a similar way to, back in the day, it was all license maintenance and you had to buy servers and it was very heavy investment. And then it transitioned to more the Netflix model, right? You host the software on the customer's behalf. So it's really easy for them to get up and running. And it sort of changed the model and, the software ecosystem. I do think AI, is going to cause the ecosystem to evolve. And so everybody needs to be thinking about that.
The software market is huge, and there's various segments within the software market. If there's a founder or management team out there that's looking for a growth equity investor, what should they call you on? Like, what would be your kind of expertise or your straight down the fairway type of company?
Yeah. So the couple things that we care a ton about, we care a ton about product market fit. We're looking for companies with really good products in markets that we know really well. And where we can be helpful and additive is on the execution front. And so we've partnered with 185 software companies over the last 30 years. We've learned a lot from each of them. We've learned what works well. We've learned what doesn't work well. We try to sort of borrow things from each of the businesses that we worked with to help the other companies in the portfolio execute better. And so if there's an entrepreneur with a really good product in a market we know well that wants help on the execution side of things, we're a really good fit. Now, we kind of want them to want the help because we've seen so much, we've learned so much. We think we can bring a lot of that experience to bear. And so if somebody just wants the money and they don't want the help with the company building, that's a little less our thing. It's hard for us to just sort of sit on the sidelines and watch. But that'd be one. As far as what we look for in these software businesses, we care a ton about sticky products with good renewal rates. Think need to have, not nice to have. So it's something that you're using this product to run your business. You and your employees are using it every day, interacting with it. And so it's pretty foundational and it's very sticky. You're not getting rid of it. And if you're that core system, you can add functionality, you can build more product over time, which drives upsell. So not only do you have really good gross retention rates, renewal rates, but hopefully you grow with your customers over time. And that's a really efficient way to grow. We prioritize that a ton. And then the last thing I'd say is we're organic growth snobs. M&A can be part of the equation, and it often is, but our returns really come from organic growth and driving growth. And so we're looking for fast growing companies, and we've built our firm around helping these founders, entrepreneurs, CEOs scale their businesses organically.
Excellent. I'd like to go into value creation capabilities, but before we do that, let's take a little segue. Tell us who Larry is. Where are you from? Where'd you grow up? Tell us a little bit about running cross country too.
Yeah. So I grew up outside of Annapolis, Maryland, so not too far from where I live today in Baltimore. I ended up going to Penn for undergrad. I thought I wanted to be an engineer, so I went to the engineering school and quickly realized that wasn't going to be for me. So I pivoted over to the business school, had some advice from some teammates on the track team. And going into it, I had no idea what investment banking or private equity was. So I kind of lucked out. A few teammates convinced me to transfer into the business school and, set me on this glide path of getting into finance. So I went to Penn for undergrad. Right out of undergrad, I graduated in 2008. So I entered the job market at a really interesting time. I was working at Merrill Lynch. My best friend and roommate was working at Lehman Brothers. And that was sort of short lived when both firms went under. So I ended up continuing with Bank of America, spent a few years in investment banking. But it was a really interesting and sort of formative experience, starting your career at that time. And then I joined JMI in 2010 as an associate. So I've been here for almost 15 years. And, like a lot of the other partners at JMI, worked my way up through the ranks. So I became a partner at the end of 2020, and it's been a really fun run.
Excellent. Let's talk about value creation capabilities. And you kind of alluded to this, that you're more focused on organic growth. So perhaps there's an example you could provide, a company you worked with where, JMI really showed up in a big way.
Yeah, the one thing I'll say is it's different for each business, right? And so you have some companies, maybe a framework would be they're horizontal in nature. So it's HR software, it's sales and marketing software. And so those businesses have very, very large TAMs, and it's about focus, and you're going to run a different playbook in those markets than you are if you're in a vertical market where you have a constrained TAM, you know exactly who the buyers are, et cetera. And we invest in both, but I think it's really important to know what you're playing for, where you want to make those investments, because it's going to look different based on the end market. And so for us, a lot of the times, and I can get into a specific example, RJ, but a lot of the times it's partnering with founders and CEOs to really put the team in place that's going to enable them to scale, then putting the process and infrastructure in place, and then it's stepping on the gas. And stepping on the gas, it's more investment. It might be more investment in go to market. So it's more sales and marketing. It's going from 5 reps to 20 reps, or tripling our marketing spend because that's going to drive pipeline and leads. Other times it's more product investment. We've got a really good go-to-market engine. We've got one great product, but if we had 3 great products, we could grow a lot faster because we could sell them back to the base. And so each company, it looks different, but it sort of starts with what's the market, what are we executing against, and where are the bottlenecks? Like in the business, is the bottleneck sales capacity? Is the bottleneck how much product we have to sell? That kind of thing.
What does your day-to-day look like? Where do you spend most of your time?
Yeah, so it's a fun job, and that every day is different. And, usually how you think you're going to spend your time when you get into the office at, 8 or whatever, ends up being a lot different than how you actually end up spending your time, just because we work with a bunch of portfolio companies and we're always evaluating new deals. So I would say broad strokes, if you looked at a long period of time, it's a third of our job is sourcing, trying to find new investment opportunities. So it's, we're on the road a lot. We're traveling a lot. We're meeting with interesting businesses and founders. A third of it's underwriting. Okay, this is an interesting company that wants to raise money or wants to sell. What are the risks? What's our thesis? How do we get comfortable with the value that we need to pay to win? And then the last third bucket would be working with the portfolio companies. And so day to day, it could be a really heavy day of I'm working closely with a portfolio company around an exit or an acquisition they're doing, or it could be bouncing around New York, meeting with 3 or 4 founders, in a given day. So it all kind of depends on the day.
What would you say has been the most challenging aspect to growth equity investing and just staying competitive and at the top of your game? Like, what's the most challenging part to it?
It's a competitive market, right? Our founder likes to say capital goes where it gets treated best. And growth equity has been a really attractive place to invest over the last bunch of years. You get some of the upside that you get in the venture world without the downside risk that, the venture world comes with. And, the buyout world, obviously, less risk, but, less reward on the upside, given pretty tightly banded outcomes. I think the big thing for us is, it's becoming easier to identify which companies are interesting in the market. So when I joined JMI in 2010, it was less efficient. you had to sort through a lot of companies to find, the needle in the haystack that was going to be interesting for JMI. So you do a lot more calls, you do a lot more meetings, but the market was a little less efficient. And so if you got there, you might be competing against a couple firms. I think fast forward to today, there's so many databases and resources, and there's just tools out there that all the firms can subscribe to that help you identify fast growing, interesting businesses in the markets that you're targeting. And so when you show up and you're competing, it might not be 3 firms, it might be 10 firms, right? And so differentiating, cutting through the clutter, convincing the founder, that CEO or the ownership group that you're the right partner for it, it's become more competitive. I do think we've got some advantages there, having done the same thing for 30 years and sort of building our firm around partnering with these founders and entrepreneurs and CEOs, but it's certainly gotten more competitive.
We're entering into the tail end. One question before I ask my final 2 questions. Is there a segment, I was talking about segments of the software market before, but is there an area that you are most excited about and you tend to spend your time in certain segments more than others?
So I love vertical market businesses that have really good product market fit. So a founder came out of a specific end market, they saw an issue, they built a product to specifically solve that issue. And then it's really obvious that everybody in that market should be using that product. So I'll give an example. We partnered with a business called Incident IQ. The founder of the business was on the board of a local school district. They were having challenges around managing all the devices that they rolled out to all their students and teachers and all the just IT equipment in the district. And so we hired some people to build a platform to manage all those devices. And it solved a huge pain point for the district. And every district should be using Incident IQ. It's the hammer, it's the nail. Like, it solves a need for them that all these districts have. And so when you find companies with really good product market fit, and it can be a small little niche market, those get me excited. But, on the categories I spend time, it's education, software, nonprofit software, customer success software, travel and hospitality, in the auto industry, software for the auto industry. Those would be the areas where I'm spending the bulk of my time.
Okay. Last 2 questions. One is, can you tell us about a person who has had a profound influence on you?
Yeah. So this is a hard one. So many people have had a ton of influence on me over the years. I've learned a lot from my partners, from teammates, the CEOs and founders that we've partnered with. If I had to pick one, I would say my grandfather. He grew up in a working class suburb outside of Pittsburgh. He never went to college. He worked his tail off. He worked in a coal mine. He was a truck driver. He worked in a steel factory. And he was tough when he needed to be. And when he didn't need to be tough, he was really gentle and loving. And family always came first. So that was a huge learning for me. And we were really close my whole life, his whole life. He passed away about a dozen years ago. But we used to spend a lot of time together. And he was really proud of me. We all know how not glamorous being a first-year investment banking analyst is. And, he was really excited that I, quote unquote, was working on Wall Street. And so after he passed away, we were sort of cleaning stuff out. I found he'd framed a few of my business cards, analyst at Merrill Lynch and associate at JMI. And that was just really special to me. So he was a huge motivator and made me want to be successful.
That's awesome. Last question. Can you tell us about a charity, cause, or other endeavor that you're passionate about?
If I can hit 2, I'll do a big and a small. So the big one, Chesapeake Bay Foundation. So our offices on the East Coast were DC and Baltimore. So we're right in the middle of the Chesapeake Bay watershed. They do just awesome work for the whole region. And I'm a big fisherman, free time on the weekends. I try to get out on the water. So I see the impact and they're doing great things. And then on the small, the Friends of Patterson Park. It's a small nonprofit in my neighborhood. Patterson Park is a big park right in the middle of East Baltimore. It also happens to be right across the street from my house. But Patterson Park is a hugely important public space for East Baltimore. There's a community pool, there's sports fields, there's a community center. They give out free meals there on the holidays. And it's very socioeconomically diverse. And they do an amazing job bringing the community together, making sure everyone has access and can benefit from what the park has to offer. So all kinds of free classes and activities. And they do a lot with a little amount of resource. So it's impressive.
Excellent. Well, Larry, we want to thank you again for taking the time to chat with us today. This has been a wonderful conversation.
Yeah, thanks for having me, RJ. Glad to be here.